Australian auctioneer Tom Panos said that if you're looking to buy property at the market bottom, your time is running out. I'm Constantinos, and today I'm going to react to some of Tom's thoughts. I love watching Tom's auction breakdown each week as you really get a feel for what the market's doing. But one of his latest streams caught my attention. Let's check it out.
So today there was a total of 9 auctions. Out of the 9 auctions, 7 of those properties sold. So I'm letting you know there has definitely been a change in sentiment in the marketplace.
So this was on Saturday the 24th of September, and Tom had some good results, selling 7 out of 9. So he mentioned that sentiment has changed, implying that buyers are starting to get back into the market. So if we do look at the auction clearance results for that weekend, we can see Sydney had 60%, Melbourne 66%, Brisbane 52%, Perth didn't have many auctions so you can't really take that into account, Canberra 57%, Adelaide strong on 70%, and Tasmania hardly had any auctions either. So yes, it does look a little bit stronger, especially in Sydney and Melbourne, where they've recently been closer to 50% and now they're in the 60s.
The boom's over, we know that, and the craziness is over, we know that. But what appears to also be over is the fear that was in the market.
So Tom feels that a lot of the fear has left the market. The market in general is accepting of the lower prices, but that buyers are again happy to overpay for a property. Now, if we look at CoreLogic's house price change charts, we can see Melbourne here represented by this black line recently just turn up a little, and Sydney likewise has flattened, while Brisbane, including the Gold Coast, is definitely trending downwards. So what does that mean? Well, I don't think it means anything. 1 or 2 weeks of slightly improved buying data, to me, doesn't mean sentiment has changed at all. Let's see what Tom has to say for potential buyers.
Hey, if you're a buyer right now and you've been trying to time to buy at the bottom of the market, listen, who knows? It might go down a little bit more. But I've got to say to you, right now, you've got more competition than what you've had for the last 2 months. Correct. And what I'm saying to you is your time is running out if you're looking to buy a bargain.
Your time's running out if you're looking to buy a bargain. Why, Tom? Downtrends never go straight down. There's always a mix of fear and then optimism, and some more fear and then optimism. In the stock market, there's a term called buy the dip, which works brilliantly in a boom market. So the price goes up, comes down a bit, that's called the dip. You buy there and the price goes up again. But the opposite occurs in a downtrend or a bear market. We get a few little positive signals, and does that mean buyers have to rush in because their chance of buying at a decent price will be over soon? Personally, I don't think so. Treating property in Australia as a speculative investment has destroyed housing affordability, helped to create a rental crisis, and has distorted our economy so that it's now extremely overweight towards property, which means our entire economy is severely at risk of a major downturn. Now, the real estate market's like the stock market. I don't think anyone knows exactly what's going to happen. And it's impossible to know when the absolute best buying conditions would be for home buyers. But here's my reasons why I think the current downtrend could have a lot longer to play out. First, we've had the most speculative boom in real estate we're probably ever going to see. Prices rose about 40% in 2 years, and that sort of price growth is going to take some time to unwind so that prices can get closer to the average mean, with the average yearly growth rate over the past few decades being closer to around 6%. Now, the fact that this boom was caused by ultra low interest rate because every central bank dropped their rates to pretty much zero. Borrowing capacity is being destroyed. Whatever you could borrow from the bank 6 months ago is drastically reduced now due to the rising interest rates. That means people can't pay as much for houses, which will lead to lower prices, especially if rates keep going up and borrowing capacity deteriorates even further. Australia's been rated by Fitch as the most exposed countries to interest rate rises. That means that interest rate rises in Australia could affect house prices much more than in other countries. And that's because our very large levels of debt into housing, combined with the fact that we have variable mortgages and only short-term fixed rates. We're seeing crashes in the stock market. Check out this chart of the ASX. The Australian stock market didn't recover that much after after COVID, and now it's starting to fall again. And stock markets around the world are at risk of severely breaking down. What about the challenges in the global economy? It ain't looking pretty out there. The US dollar is soaring ridiculously against all other currencies. A number of countries have financial crisis at the moment. National debts have soared up the wazoo, and almost the entire globe is trying to curb soaring inflation. Add to all this, we've got a rental crisis. There's ridiculous competition, rent prices are soaring, and people are being made homeless. And all this has highlighted Australia's deteriorating housing affordability, and the narrative is starting to change. People aren't happy with the massive wealth gap between property owners and non-property owners. And I think this is part of the reasons why the Greens gained additional seats in the last election, because they seem so vocal about improving housing affordability. And they're now proposing to freeze any rent hikes for 2 years. So suddenly, the landscape for property investors in Australia is not so certain. We've had 30 years of unbelievable returns, but the next 30 could be a completely different picture. Tom, I love your content, but I just feel that the big picture for the economy and the housing market is not looking very rosy at all. For that reason, it's a very real possibility, in my opinion, that prices could continue falling over the next 6 to 12 months. And the biggest reason this could be the case is due to the high inflation, which means that the RBA can't just reduce interest rates and keep an ultra loose monetary policy like they have over the past decade or so. I'm Biko Konstantinos.